Hello guys, and welcome once again to my YouTube channel where I share with you quality content regarding the financial markets, regarding trading. So in this particular series, there's a particular series that I've just begun simply for the benefit, for the purpose of giving value, for the purpose of uh, making sure that people are realizing consistent profitability, especially on these boom and crash indices. These boom and crash indices, they are controlled by a third party and they are so predictable. They are so predictable. There's simply an algorithm that they use, and some of us who have mastered the algorithm, we know what is happening. We know what is going to happen. Right now, I can even tell you what is currently happening and what is going to happen. I can actually predict all of that, right? I can actually predict all of that. I can actually predict what is happening, what is going to happen, what is this, what is that. I can actually predict all of that, right? So that's not the purpose of the video. The purpose of the video is so that we start from where they started. I'm starting to analyze this boom and crash for you from where they started, so that you see how you could have taken advantage of all the opportunities that they have been presenting to you ever since they launched this boom and crash. So this is going to be a very important video, very important video. It's going to be a very important video, very important video. If ever you're a boom and crash trader, you need to take this video seriously. You need to take this video seriously. So currently you can actually see what's happening. We actually tapped a zone. If you notice in my previous video, I showed you that there's a Fibonacci retracement zone there, which is actually a very high probability zone. So we can actually get the drop now, but all you just need now on lower time frames is entry criteria confirmations, right? All you now need on a lower time frame is an entry criteria confirmation. What is that? Let's say let me go down to 4 hour, right? This is 4 hour time frame. 4 hour time frame. Let me go to 1 hour. Right, 1 hour is much more better. Right, 1 hour you can see we have our change of character there. So there is so many entries that you would have taken here. The first entry that you could have taken is this one. Right, this one, let me put this nicely. This entry, if you notice this trend line, this is an immediate trend line close to where the market is, right? You could have entered that sell there. Break and retest of that trend line was a simple entry that you could have entered. Then it breaking and retesting into this zone, into this trend line, you would have also entered sells there. So now there are two possibilities of the next entries, because all we now need now is solid confluences before you jump into the trades. You need solid confluences. Let's see if we can see something else. You can see that there's a trend line as well there where the market currently is. There's sort of like a trend line, which is where it can actually boom. It can actually boom there. If you notice, touch. So it can actually boom there. It booming there. There are two positions that we can expect our next sells. I'm expecting our next sells to happen from a supply zone, either from this supply zone. Why that supply zone? That supply zone, just below it, there's a lot of liquidity that would have been taken out, right? That would be a higher probability zone. Higher probability entry zone is that supply at the top there, right? That's a high probability entry zone. If it doesn't come all the way there, we're now looking forward now to this other internal supply, which is inside our region, which is here. But this one is a low probability compared to that one outside, right? But just in case it happens, once we get our confirmations, you can also enter sales there. That's just in case you didn't enter sales there on that first trend line. Or let me go to 30-minute, because some of these entry points, you can actually see them clearly, especially when you're you're on a lower time frame like this, 30-minute, you can see the counter trend clearly like that. You can see the counter channel like that. So this was so clear, so clear, so clear. You can see. So here in 30-minute, this is the supply. This is the supply that we can also expect some beautiful selling opportunities from. Those ones now will be higher probability aggressive sales, higher probability aggressive sales, because we now have an internal change of character. Once we have an internal change of character, we expect the market to pull back, giving us a pullback. It's pulling back too. Once it pulls back there, that's a higher probability selling zone. That's a higher probability selling zone that one can even go aggressively here, because remember, this is a swing trade. This is a swing trade. The major target for this swing trade, if I show you, the major target is here at the bottom. That's the major target. But the first reasonable target is obviously this internal, this level, which is where this trend line is, right? I think it's around this supply zone or this order block where this trend line is as well, right? Respecting this channel. That's the first internal reasonable one. Once that one is broken, once you see this channel being broken, once you see this happening, know that we are now coming down all the way to our major target, which is that lower low at the bottom there, coming out to take out this lower low, right? So that one will be a major target, but so far our target will be restricted internally there. But so far, this is what is happening. If you didn't enter sales there or there, wait for the pullback there. Once you get the pullback there, you can enter your aggressive sales there, stop loss above, then we hold all the way, right? So let me just go back to what I wanted to illustrate. I wanted to illustrate how this boom and crash, how they really move, starting from 2019, so that you see. So from 2019, the things that you must be so much good at is identifying structure. First thing here, you can see where the low, right? Major low that was broken, which was a swing low that was broken. That's a change of character. Why is it a change of character? Because here structure was being broken to the upside, meaning we're establishing higher highs and higher lows, right? But now we broke this higher low, right? After that higher low is broken, that's a change of character. Once you now have a change of character, we expect a pullback. Pullback where? Pullback into a region of supply, right? Change of character, we expect to pull back into a region of supply. And where is our target? Our target is the law that established that retracement, which was this one. That's your target. So meaning once you enter your sales there from that supply zone, your major target is that low there at the bottom there, because that's your lower low, that's your target. So that was a simple swing trade that you could have ended from that supply zone all the way to that low. Let's go down to 4 hour. Let's see if we can get more details, right? This is 4 hour time frame. It's much more better, clear, much more clearer, right? Much more clearer, right? It's much more clear. So this is this the zone? Yeah, this is the zone, right? This is the zone here. 4 hour time frame. This is the region, right? So if you notice, the market came, consolidated, it was touching and dropping. The first touch was here, touched, dropped, touched again, dropped, right? That's the first sign. The next thing that you can also identify here, you can identify that there's a zone that it was failing to break to the downside. There was a region or a zone that it was failing to break to the downside. Once it broke that one, it now continued selling all the way. This was a zone that it was failing to break, right? Right. So that was So this was a very, very simple, I can say simple structure, because you could have simply targeted these internal levels first. Once those internal levels were reached, you would have actually you have made money out of those. So if you notice on the daily, the level is much more clearer. It seems like it was a consolidation. You can actually see a consolidation is maintaining the same lows and maintaining the same highs. So it was basically a consolidation. So what, as it was touching your supply, you could have been selling. Touch your supply, you sell. Target the bottom of the consolidation, target the bottom of the consolidation up until the break. So the first major entries were on the supply. First major entries were on the supply, right? First major entries were on the supply. On the supply. You could have sold. Then the break of this consolidation, you could have sold as well there. Remember, the target is this lower low, which was here. So this was a beautiful swing trade from all the way from that supply, which was a lower high, to this lower low. Swing trade that was so beautiful. So that is how you could have ended that swing trade. Other confluences that you could have added, other confluences like your trend line break. If you notice, the trend line break was also the break of that consolidation. That was another confluence as well. So those are all the confluences that you could have added for this trade, for this particular trade. So now, where is our lower high now? Our lower high is now this level here. That is now my lower high, right? That is now my major lower high. Once I now have a major lower high, that's my lower high there. That is 106.95. That is my lower high, right? According to this structure. Where is my lower low? My lower low is the low that is going to break internal order flow. The low that is going to break internal order flow. Internal order flow. What is internal order flow? Those are things that you must join my community in the description below to know. Internal order flow. This is simply this internal lower high. When it's broken like that, that low that breaks that internal order flow. That's my major lower low. Like this, I extend the line. Right. This will be a target for me in the future once we now have a lower high, right? Let's zoom in again. So the one that broke internal order flow, that was my, once internal order flow has been broken, you know, it's also a sign that we are now going up. Once internal order flow has been broken, it's a sign that we are now going up. And that going up, don't think that is now bullish. The market is now majorly, or it's overally now going, it's now overally, let's say, bullish. No, it's not overally bullish, but it's simply giving you a retracement. It's a bullish retracement, basically. If you are in a major bearish order flow market, if ever the market is going up, it's a bullish retracement. So this break of internal order flow, right? Break of internal order flow there was a sign to start buying. Or the break of the trend line. Break of the trend line, you could have entered your buys. The retest, it happened in a key zone. Where was the key zone? You can see there's a key zone here. That's a key zone there. Key zone. The market came back to retest that key zone. You could have bought again. So you could have bought again on the key zone, or even on the break of this counter trend line. That was how you could have entered those buys going up. Remember, this is a retracement buy. After every break of structure, which was the break of this low here, which is this arrow, right? That's a break of structure. After every break of structure, we expect a pullback into any unmitigated order block, any unmitigated supply at the top. Once there is any unmitigated supply at the top, you know that the market is going to retrace all the way into that zone. So now, the next important point now, I need you to listen to me carefully. So I said after every major break of structure, we expect a retracement into an unmitigated supply. If you notice the left, there was no unmitigated supply. So if ever there is no unmitigated supply, if ever all the supplies are mitigated, there are two possibilities. Either the market is going to mitigate an already mitigated extreme supply, Or the market will come and retest the lower high. The lower high, it's that red line at the top. You realize that's where it actually retested. It retested our lower high. After retesting our lower high, it failed to break there. Had it broken and closed above, had the body of the candle broken there and closed above, it was going to be a different case scenario. But if it comes there and rejects and closes below, it means the market is still in our favor. It's still a bearish order flow market, right? It's still a bearish order flow market. It's still a bearish order flow market. It's still a bearish order flow market. So that was a high probability entry zone. That was a high probability entry zone. Using this counter trend line, you could have also scaled in more sales upon the break and retest, right? And also other key levels, you could have also used them for scaling in. But the major target, remember, is this low at the bottom. That's your major target for all those sales. So I want to teach you a certain technique now. I want you to listen to me carefully now. Remember, we've identified our major level, which is that red line, which is our major lower high, right? Which is where we are coming from. Where are we going? We are going here to this lower low at the bottom here. That's where we are coming from. That's where we are going, right? Once you have identified where we are coming from and where we are targeting to go, when you go down to lower time frames, you are simply going down there for extra entry confluences. Extra entry confluences. Go down to, right, this is 4 hour. 4 hour time frame. 4 hour time frame. I showed you how you could have entered the buys. We spoke about the buys. The buys, you can also see even as it was going up. Remember, you were targeting an extreme supply at the top. So it giving you these retracement channels like this. These are simply your opportunities. These are simply opportunities. Remember, you don't enter trades anywhere. You don't enter trades anywhere. You wait for confirmations or confluences, right? You wait for confirmations or confluences. Confirmations or confluences. You wait for them. Once you have confirmations and confluences, or once you have clear channels, that's when you enter a trade. You don't enter trades in the air. That's where you encounter unnecessary losses. So, as I said, this is the trend line, right? You can also reduce this trend line to the immediate structure there at the top. Right, so 10685. That's our lower high. Soon as the lower high was reached, soon as it was reached and the market rejected below, that bearish candle rejection there, that was going to be my first heads up to enter. I was going to enter aggressively. My stop loss above the weak rejection of that candle. Above the weak rejection of that candle, right? That was going to be my first heads up to sell. That was an aggressive sell there, right? An aggressive sell. Let's also identify other opportunities. So you enter there, your target, you would have targeted this trend line as your first target. You'd have targeted this trend line as your first target, right? Once your first target is reached, the next important thing is to wait for a pullback formation in form of a channel or a pullback into that trend line. Both cases, you're gonna get a certain opportunity. In this case, you can see we pulled back into the trend line. We pulled back into the trend line and also into a certain zone there. That's a region there. If you look to the left, that's a zone. So we pulled back into the zone, broke the trend line. We broke this trend line, came back to retest, also established this upward channel. So establishing this upward channel, you could have also sold upon the breakout of that upward channel, selling there upon the breakout of that channel and the retest. Your target, your first immediate target was going to be the law of that channel. The law of that channel is going to be your first immediate target. Once the law is broken or is taken out, which is your target, right? Always expect these pullbacks. Always expect these pullbacks. Always expect a sort of like a pullback or a fluctuation before the market continues going in that particular direction. Remember, the market doesn't move in a straight line. It goes giving you those push pullbacks. So it establishing this retracement channel, your next entry was going to be upon the breakout of that channel. Your target is where? The law of that channel, which was here. Right? Remember our ultimate target. Where is our ultimate target? There at the bottom, that major blue line at the bottom, right? So here we're still going. After our internal target is reached, you wait for a pullback. A pullback is bound to happen in form of a channel. Notice this was a channel. This was a channel. This was a channel. Right. Breakout of the channel, or even the top of the channel. At the top of the channel, you could have sold as well. Your target is the low of this channel, which is this one. Right? Low was broken. You could have shifted your stop loss to maximum profit. You realize that you could have scaled in. You could have trailed your stop loss. You could have maximized on this opportunity just by trailing your stop loss. Just by trailing your stop loss, you could have actually maximized on this opportunity all the way coming down. So this was a very beautiful selling opportunity. If you notice, all the way from our zone, which was the red zone there, up until our target was reached, this is how you could have been scaling in on those trades. These were the opportunities that you could have been scaling in, entering, scaling in. So even here, this was another scaling in opportunity. The breakout could have been an entry. The retest, it's also an entry. The breakout there, entry. The retest was also an entry because the retest was also retesting a supply zone, which was here to the left. So the supply zone retest as well was going to be an entry there. You see? So up until our zone was reached, up until our zone is reached, our buyers will still be having that bearish bias. We'll still be maintaining that bearish bias because from a lower high, we must come and take out the lower low. That is bearish order flow. That is correct bearish order flow. When you come out, so this channel as well. So the only problem that people don't have now is they don't have patience to wait for these channels to form. Wait for the channel to form and also have the correct bias from a higher time frame. Once you have the correct higher time frame bias, you know the action that you must be taking on a lower time frame. You know the action to be taking on a lower time frame. If you notice from that red zone there at the top, I haven't talked about any buys. I'm simply talking about selling opportunities. Why am I talking about selling opportunities? It's because the momentum is going down. When the momentum is going down, you must focus on where the momentum is going. Focus on the opportunities that are in line with where the momentum is going. Focus on opportunities that are in line with where the momentum is going. So, up until the major target was reached, that was a very beautiful swing trade, all the way from the top there. All the way from the top. Just imagine you entered there at the top. Once the market moved, you simply moved to your first target, which was this one. You simply shift your stop loss to break even. Then you just watch and hold and be scaling in as it will be giving you these retracement channels. These retracement channels after every low is broken. These retracement channels will simply be your opportunity of scaling in because you know that your ultimate target hasn't been reached. Up until your ultimate target is reached, that's when you go back to the daily now. Go back to the daily. You're going there. This was our ultimate target. This is an ultimate break of structure, the same as this one. After every break of structure, we expect some formation to happen. And once that formation has happened, we expect some formation to happen. And once the purpose of that formation is to establish a new lower high, and a new lower low. right? Where is our lower low? Our lower low is the low that is going to break internal order flow. The low that is going to break internal order flow, where is it? Here you can see it was this one. That's the low that broke internal order flow in this case. You could have gone down to a lower time frame, gotten a counter trend line, meaning if ever you sold based on that counter trend line, if you put a counter trend line on a lower time frame, it's much more clear on a lower time frame. It's much more clearer. Even if you go down to 1 hour, it's much more clearer there. You notice there it's much more clearer than here on the daily. Where is it? Here it is. So this is the counter trend line here. You can draw it. Like that. Your target is this low, the low that broke internal order flow, because that's our new lower low now. Sold there, your target is there. Another swing trade as well. Let's follow structure. The low that is going to break internal order flow, that's our focus. The low that is going to break internal order flow. Let's go down to the daily, back to the daily. So we're in October 2020. Where is our lower high? That's your first duty. Lower high, lower low was broken here, which was a break of structure, right? Lower high, we broke the lower low, right? Then we now want the low that breaks internal order flow. Internal order flow, if you follow internal order flow, it was going down, lower highs, lower lows, lower highs, lower lows. Then we had this internal lower high, which was here. It was broken there. So which low broke that? It was this low. This was the low that broke internal order flow according to the daily. That's the correct low that broke internal order flow. So that low that broke internal order flow, that's my lower low. Once you now have a lower low like that, know that the market was, the purpose of going up is simply going up to create a lower high. It's simply going up there to create a lower high, right? If you notice this lower high, it never went all the way to test this previous lower high, like what that first case scenario did. So these are scenarios that are very possible on any market, whereby the market comes to test the major previous lower high. It coming to test it, it's simply testing even the skill of people who are confused, who don't understand the structure. People who don't understand structure, they will think that the market is now going up, yet it's simply testing the previous lower high. So here, this counter trend line could have been your entry criteria as well. Could have been your entry criteria on that particular trade. That counter trend line could have been your entry criteria. Let's go down to 4 hour. Let's look at the entry counter trend line there. Counter trend line. So here, even the buys, you can take the buys. There's nothing wrong, right? Remember, there's nothing wrong with taking these buys. All you just need to know is just that you'll be having short-term targets. For example, here you could have used this where this trend line started. You could have used that as your target for these buys, right? The target was reached. So now this counter trend line now could have also been your entry criteria for sales, swing sales, breakout. You could have entered the retest into the zone, retest into a key zone. That was a, if you noted the retest was into a key zone, it was also an entry as well. So breakout of the trend line, it was an entry. Retest into the zone was also an entry. Your target is here. Target was reached. Target was reached. So going down to the daily again. Going down to the daily again. Remember, our lower high was this one. Where is our new lower high? Is this one. This lower high was not broken, so it means we are still maintaining bearish order flow. This is our new lower high. That's our new lower high. And let's follow internal order flow. Let's look for the law that will break internal order flow. So someone might ask, so how do you enter these trades coming down? These trades coming down, you simply enter them by following internal order flow. Following internal order flow, this is you following the internal order flow structure, which is break of structure, pull back, break of structure, pull back, break of structure, pull back. That's internal order flow structure. That's what I'm referring to. So the next law that you can see that broke internal order flow here, in this case, according to major structure, is this one. So this was our new lower low, right? So it being a new lower low like that, that's our lower high, that's our lower low, right? So we now have to go up and create a new lower high. This counter trend line could have been an opportunity to buy. You could have bought if you wanted, but I'm much more interested in the sales because the momentum is still flowing to the downside. Counter trend line break here, you would have entered the retest, you could have entered as well, targeting this low. Where is our new lower high? Our new lower high is this one. That's my new lower high there. So from the lower high up until we took out the lower low, those were simply opportunity in between there. Those are simply your opportunities. Those are simply opportunities. All you just need to do is go down to a lower time frame. Once you're on a lower time frame, right, which is like here, I'm on the 4 hour. All I want on the 4 hour, for example, the first thing here, you can see this. Right, you can see that. Right, so on the 4 hour, that's my lower high, right? That's my lower high. And I want you to notice how you could have ended this trade. This is where I'm going to stop. Then we'll continue in the next video. We'll continue then up until we reach where the market is today. So which one is our lower high? Our lower high is the high that will break internal order flow. Where is internal order flow? This was in the internal lower high, right? Internal higher low, I mean. This internal higher low was broken here, which was where our change of character was. So that's a change of character. Change of character means we're now going up. After every change of character, we expect a pullback into any unmitigated supply. And here in this case, it came all the way into the lower high, which was here. The same case scenario that happened on the daily, it also happened again on the 4 hour. That's a high probability and selling zone. All you simply wait for, the candle to, once you wait for the candlestick to reject below. Once it rejects below, you enter your sales, your stop loss above the weekly rejections at the top. That was how you could have entered. You would have entered aggressively there on the line, or this trend line break and retest. It was also another scaling in opportunity. Another opportunity to sell was also this key zone here, the break and retest of the key zone. Remember, your ultimate target is this low. It hasn't been reached. You can also identify the key zones. That's a key zone there. The break and retest of that key zone as well could have also been in your opportunity to sell. Here, you could have used this counter channel to the upside. You could have sold nicely. Here as well, you could have also sold based on that. So you see how many opportunities were there. Opportunities were being presented. Opportunities were being presented as it was coming down. The problem now is when people come to the lower time frame, they just look at what is happening on the lower time frame. They want to jump in on the lower time frame without having that overall higher time frame picture, which is a picture that you must always have. The overall higher time frame picture is a picture that you must always have, because you know where the market is coming from. We're coming from that lower high, 62.80. We're coming to take out the lower low. Simple. So guys, I'm going to stop here on March 2021. I'm going to stop here on March 2021. I'm going to stop here on March 2021. In the next episode, I'm going to continue from where we left off. You can actually see that our next lower low is this one, right? And you realize that our next lower high is this one. So in the next episode, I'll also share with you other confluences that you can also look at if ever you want to maximize on these opportunities, other confluences to look out for if ever you want to maximize on these trading opportunities. So guys, I'm going to do these videos for all your crash and boom pairs from where they started, from when they were launched up until today, where the market currently is. So the next episode or part 2 will be on boom 500 to finish it off. Then the next time we'll go to crash 500. The next time we'll go to boom 300. Next time crash 300. Next time boom 1000. Next time crash 1000. So it will help you to like the video, to share the video, to subscribe to the channel so that you don't miss these good videos like this, and join my team in the community and through the description, links in the description there. You can join my team and be part of my community where we make money each and every single day trading these financial markets. So guys, I hope you like the video. Comment in the comment section, share with me your thoughts, share with me your thoughts on these videos that you keep sharing, on this value that you keep on delivering. Share with me your thoughts. So guys, make sure you are subscribed to the channel, make sure you like the video, make sure you are tuned in on each and every single video. Thank you for watching. See you.